All right, you guys, welcome back to the Deep Basement Index. My name is Angel Rios, and on today's episode, actually, this is the second video I do today. All the babies are asleep, good to go, well fed, and hopefully they give me about an hour and 20 minutes to do this video. Today, we are going to go through Strategy's Q2 earnings call Q&A that they did with investors in partnership with Natalie Brunel, who, if you don't know her, she's a huge podcaster in the Bitcoin space, because a lot of the audience that I have and myself, we're investors in MSTR, and we like to see what the company is doing, and especially if you can get like questions and Q&A directly from Phong Lee and Michael Saylor, it's so worth it. And if there's something that I feel like the audience is not going to understand or something like that, but I have the answer to, I'll go ahead and pause the video real quick, and we'll get into it. So without further ado, let's go ahead and get into the earnings call. And together, we are going to go through it, you guys. All right, so without further ado, let's go ahead. Strategy Q2 earnings call, investor Q&A. Let's hear these two financial magicians talk.
By retail and institutional investors through the company's official question form and on X. We received dozens and dozens of submissions covering a range of topics, and my job today is simply to put those questions to the company's leaders and keep us moving so we can cover as much ground as possible. If you're watching live, you can continue submitting questions in the replies, and my colleague Alex Devani we'll be looking out for new topics and angles that haven't already been covered by the submissions we received over the last week. And if you can't stay for the entire hour, don't worry, the full replay will be available on Strategy's platform along with mine. Now, before I introduce our guests, a brief disclosure. Some statements made during today's presentation regarding future expectations, plans, and prospects may constitute forward-looking statements. Actual results may differ materially due to important factors including fluctuations in the price of Bitcoin and the risks described in Strategy's SEC filings, including its quarterly report on Form 10-Q filed on August 3rd, 2026. This presentation is for informational purposes only. It is not an offer to sell or a solicitation of an offer to buy any securities, and it is not investment, financial, legal, or tax advice. Any offering of securities will be made only by means of a prospectus.
Look, just real quick, it's crazy that like YouTubers, and even I do it on my channel because we have to say this is not financial advice. You do whatever you want to do, this financial entertainment, whatever. You can see Michael Saylor laughing because it's like, bro, like, can we all not just be big boys and big girls and just take accountability for our own like investment decisions? I mean, it's ridiculous. We all have to do that, but I digress.
And additional information about Strategy is available at strategy.com. So with that, let me introduce Michael Saylor, the founder and executive chairman of Strategy, and Phong Lee, Strategy's chief executive officer. Michael and Phong, great to have you back.
Happy to be here.
Thanks for having us, Natalie.
All right, well, we have a lot of questions to get through, so let's jump right in. The first one came from several investors, and it's directed to you, Michael. You recently posted a chart on your X page where you outlined a digital asset monetary spectrum that included digital capital, digital credit, digital money, and digital currency. What is SR-STRC-USX, which you describe in that visual as digital money? And do you disagree that Bitcoin is money?
Number one worst oil for your waistline.
This is canola oil. It's organic. Make sure it comes in a glass.
Sorry for the commercials, you guys.
Corn oil. Absolutely.
Skip that.
I think if you're using the theoretical term for money, then you would say money is a non-sovereign store of value bearer instrument like gold. But that's a classical Austrian economist view of money. The current conventional view of money is that money is a US dollar equivalent or a fiat currency equivalent asset like the US dollar that holds its peg against a fiat currency. So I think that 99% of the world thinks that money is a fiat currency, and a money market is a fiat currency that generates yield. I think that there's 1% of the world that are Austrian economists that think that money is gold. Some of them think money is silver and money is Bitcoin. But I think that's an academic debate, and there's not much point in getting mired in an academic debate because about 0.1% of the capital in the world, or 0.1% of the economic value in the world, is actually invested in the Bitcoin network right now. 99.9% of all the capital, all the money, all the stuff of value is invested in stuff other than the Bitcoin ecosystem right now.
Now, peep what Michael Saylor is saying here, right? All us Bitcoiners agree that Bitcoin is money. Bitcoin is the hardest money, okay? What he is saying is that in the academic version of, explaining what is money, right? Fungible, divisible, store value, recognizable, all of those, like transportable, all those properties of money, there's 5. Bitcoin is the hardest money, right? But again, the truest definition of money really is that, money is whatever people decide it is. And what Michael Saylor here is saying is that the world right now has decided that 99.9% of the economic value is stored in traditional fiat currencies like the dollar, like the euro, like the yen, things like that. And so the consensus is that right now fiat currencies is money, and economic money, economic currency, economic power is stored in these fiat vehicles, right? That's what he's saying. And technically he's right. Money is whatever people decide it is, and right now it's fiat currency. So unfortunately, but let's continue.
A lot of that's equity capital, a lot of it's real estate capital, some of it's metallic capital like gold, some of it is credit, hundreds of trillions of dollars of credit. So I think that if you want the Bitcoin network to grow by a factor of 10 or 100, then you're going to have to attract capital from the traditional finance establishment. And that means attracting equity capital flows or credit capital flows or money market flows. So for the people that have not yet bought Bitcoin, the ones that we're actually working to serve, their view is that money is a medium exchange or unit account, a store of value, and they would think that that's the Japanese yen in Japan or a yen money market in Japan. They would think it's a US dollar money market in the US. They think it's a euro money market or euro in the European Union. And so the TradFi or the Keynesian view of money is a fiat currency or a fiat currency equivalent that pays yield. So the chart that I'm illustrating is the digital assets taxonomy. We think that Bitcoin is capital, and so digital capital is Bitcoin, and Bitcoin competes against gold, real estate, equity capital, credit capital, or money markets held as capital, or art. Those are all the things that Bitcoin competes against. 99% or 99.9% of the economic value of the capital in the world is not Bitcoin. So if you want to get it, you need to compete against those things. You need to tell people why Bitcoin is better than gold or art or real estate or equity like the S&P index, or bar gold. STRC is digital credit. We've extracted a credit instrument from capital. It's semi-volatile. It's not as volatile as Bitcoin, but it's more volatile than a fiat currency. And the next step is to take STRC and create something that looks like a digital money. And a digital money would be the mythical Bitcoin-backed stablecoin. It's a fiat currency stable asset, whether it's a stable dollar or a stable yen or stable euro. but pays yield.
God, these commercials are gonna kill me. Why are there so many?
So the difference between digital currency and digital money is digital currency is deemed to be stable coins. It's like Tether or Circle or any other digital stable coin in whatever currency system is out there. Digital currencies don't pay yield. So digital currencies are the winners of medium exchange in the crypto ecosystem and the digital assets ecosystem. I think that that's there are some fundamentalist Bitcoin OGs that wish that wasn't the case, or they've been hoping it wouldn't be the case. But I think that at this point in the year 2026, we can see that substantially all the prices in the world, if I were to say 99.999999% of the prices in the world are in fiat currency, I might be understating the case. It's just, to somewhere between 6 and 100 significant digits after the decimal place. All the prices are in fiat currencies, which means that the medium of exchange is generally the US dollar. If you're holding stable coins, they don't pay a yield, though. It makes a good medium of exchange. It makes a very poor store of value or a weak store of value. The idea behind digital money is to take the best of digital credit and the best of digital currency and merge the two together and create something which is generally stable to a fiat currency but pays a yield. And so if you can actually create a yield on a stable currency instrument, then you've got something which serves as much better store of value. So that particular asset that I put in my chart, that's the first example. Well, one of the first examples, maybe the first example of someone creating a digital money asset. And they're creating a digital money asset by engineering a stable asset that actually has yield. The yield comes from digital credit, and the asset is stabilized through some financial engineering to be stable to a US dollar. I expect there'll be dozens, if not hundreds, of different types of monetary assets that people build. So it's not the only one. I think there's about a dozen different organizations that are building digital monetary assets in the digital assets ecosystem. And I don't think digital money be limited to tokens. I actually think that you'll see digital money funds created as ETFs in the United States and probably as ETPs and other types of publicly traded funds that trade on exchanges all around the world. And I also think that we'll see private funds, just like there are money market funds that are private that don't trade publicly. There are money market funds that are public that trade as ETFs, and there are monetary instruments like currencies that are stable coins. So the thing that we think is really important is that if Bitcoin is going to grow by a factor of 10 or a factor of 100, we need to facilitate capital flows from the credit markets and the money markets. And right now, what's going on, if you took away STRC and you took away the digital money tokens that are now starting to develop, then what you have is fiat currency flowing into the stablecoin market, and it's all backed by currencies, by fiat currency like US dollars. And then you have capital flowing into the capital market that actually supports BTC, but there would be no capital flows from the credit markets or the money markets into this ecosystem.
And here comes the ad. Okay. By the way, never, ever, ever get Verizon internet. All right, just so you guys know, we switched and we're about to get Starlink coming here soon.
if we create good,
Now, understand what Michael Saylor was saying there. A lot of people criticize him so much for his STRC product. The way you're going to get Bitcoin to replace fiat instruments and to replace fiat currencies, okay, is by sucking out all of the monetary energy from those instruments, okay? And a huge part of the monetary energy in dollars is in the credit instruments, right? Yield-bearing instruments. And so if you want more money from what he's saying is, if you want more money from the fiat ecosystem to flow into Bitcoin, which is what all us Bitcoiners want, you just suck it out of that fiat credit ecosystem and move it into a Bitcoin-based credit system. Okay. And that's what he's doing with STRC. And that's why I think personally, it's a great idea. And I don't think Michael Saylor should be getting the flack that he's getting. He's actually helping the Bitcoin ecosystem as a whole, but that's to each his own. That's my opinion, but that's what he's explaining here.
credit, then we will be able to create monetary instruments on top of it. And the companies that create digital credit, like Strategy and Strive, will have equities, and the equities will attract capital flows, which will also flow into Bitcoin. And companies that create digital monetary instruments, the instruments that'll be on top of digital credit, they'll have equity as well, and they will attract capital flows into the ecosystem. So we think that the economy will grow if we actually create credit instruments, money instruments, currency instruments, and equity instruments, all of them that are tied in or backed, but either backed by BTC or tied into the Bitcoin ecosystem. So that was an example of the first of what I think will be many digital money instruments. It's not the only one, and certainly I'm not endorsing that particular one as an investment. It's a security type investment, but I think that it's a seminal event in the same way that when people first created money market funds, that was a pretty important event, and when people created ETFs backed by money market funds, I think that's an important event.
All right, let's turn now to the equity side, to the common stock MSTR. We have a question from Rob. He said, I have 3 children and I invested $73,000 each into MSTR, believing in the long-term potential. Today, that $73,000 is worth $20,000, and the long-term potential is now a function of getting back to break even. MSTR common shareholders seem to be your lowest priority. You defend STRC and pay down converts using MSTR at the market offerings. Achieving BTC per share yield doesn't do much for my kids. I have a decade-long perspective, but I'm worried that you will ATM so much that we'll never get back to $3.25 a share. Have you considered paying out a dividend to MSTR common shareholders simply to do something right by them in the near term?
I can start on that. And
look, that's an honest question, right? There's a lot of people that bought MSTR at $500 a share, $400 a share. Just like this guy, he put $73,000 into each of his kids. It sounds like at a $325 like cost basis. Not everybody can, like, for example, I first bought MSTR when they first bought Bitcoin, right, in 2020. And now I've been accumulating from the 130s down. Okay. But, some people have different entry prices. But again, if you had bought Amazon before the dot-com bubble and then dot-com bubble hit, you would have been down 95%, 96% on your position. But if you had just held it from there, you would have multiple thousands of X your money. It was the best investment of that decade or for 2 decades, right? So sometimes you need to have a longer time horizon, low time preference, understand what the team is doing, build your own conviction in the stock, and then the things come after that, right? And then you DCA into the stock. But it's an honest question, man. I mean, if you put $73,000 for your kids and now each kid's position is worth, 20 plus grand, I mean, that's got to sting. So honest question.
Mike can add, and Rob, thanks for being a shareholder and investing some money into MSTR for your children. Of course, the common shareholders and MSTR is our most important priority, and creating value and increasing the price of MSTR is our number 1 priority. How do we do that? we do that by outperforming Bitcoin. And since the beginning of our strategy of putting Bitcoin on our balance.
And by the way, you saw that outperformance today. You've seen what MSTR can do compared to Bitcoin when Bitcoin pumps. Everybody was saying that, oh no, MSTR is not going to outperform Bitcoin anymore. That's not true. Today, right, Bitcoin was up 7%, while MSTR was up 14%. So the strategy is working. You are going to outperform the price appreciation of Bitcoin in a Bitcoin bull market. So understand, like, today's a perfect case for why that is still in play. And it's a good investment strategy if you're a Bitcoiner, you're investing in Bitcoin vehicles, to want to outperform Bitcoin through the form of leverage Bitcoin plays like MSTR.
That was August of 2020. Bitcoin's been up 32%. MSTR has been up 41%. So we've outperformed Bitcoin over time, and I understand that you came in later and haven't seen that outperformance.
There you go.
What happens over time, right? When Bitcoin's up, we tend to go up more because we have more Bitcoin per share, and we do that via a historically leverage, and we've done that more recently via amplification. What that does mean, and what you've experienced, is when Bitcoin goes down, we tend to go down more. So Bitcoin's seen a drawdown of 50% from all-time highs. MSTR has seen a drawdown roughly of 75% of all-time highs. Because Bitcoin's our underlying asset, increasing Bitcoin per share increases the value of MSTR when Bitcoin goes up, and we'll see sharper drawdowns. So how do we increase Bitcoin per share? We increase Bitcoin per share historically through leverage, through convertible bonds, and more recently through what Mike talked about, which is digital credit and amplification through Stretch. And so ultimately, if we want the common to go up, we have to increase Bitcoin per share. And increase Bitcoin per share means making Stretch work, which is why it may seem like we're talking primarily about Stretch right now, getting Stretch back to par, but that's what gets Bitcoin per share to go up and MSTR, the common, to go up over time. We're not going to pay a dividend. That's not really the best deployment of capital. The best deployment of capital for us is to get Stretch to work, to buy Bitcoin and put it on our balance sheet. And that's ultimately the objective of the company. And so over time, if you believe in the underlying asset Bitcoin, and Bitcoin starts to rise for all the characteristics Mike had mentioned before, then MSTR will start to rise over time. And that's ultimately the goal of the company.
Michael, do you want to weigh in at all on that?
If you start every interview answer with, well, the next 30 seconds will change your life.
Yeah, what I'd say is if you want a dividend, you should buy one of the preferred stocks, like STRD pays like almost like a 15% effective yield. So if you're looking for a stable instrument that pays a dividend, then I would look to STRC or STRK. They were designed to pay dividends.
This is where Michael Saylor gets in trouble. All right. For you guys that don't know, Michael Saylor is the founder of Strategy. Previously, the company was known as MicroStrategy. They pivoted to a Bitcoin treasury company strategy in 2020, right, during COVID, when they brought interest rates to zero. He keeps saying that instruments are stable, but the thing is, there hasn't been enough time proof to prove that the instruments themselves are stable, and the price has been volatile, even with the most stable one, which is STRC, and we had that huge depegging that happened from 100 down to 75, right? So, you know, I'll be objective here. Like, Michael Saylor sometimes needs to be a little cautious with his language when talking about how stable the instruments are.
Give some upside. If your time horizon is less than 4 months, you probably should own a money market. If you are making an investment and want the money back, or want to see a good return on your investment in 4 months to 4 years, you're probably a credit investor, and you ought to consider one of the credit instruments. If you're holding the equity, then you need a time horizon minimal of 4 years, right? Ideal 7 to 10 years. Bitcoin was at an all-time high about a year ago. So when we're in a bear market, you're going to get more amplified Bitcoin. So if Bitcoin's down 50%, we're going to be down 75%. And in a bull market, we expect to outperform Bitcoin. So, when you're buying MSTR, you're getting amplified Bitcoin. When you're buying Bitcoin, you're getting on a roller coaster. So if you are going to get on a roller coaster, then probably you want to use a metric that's like a 4-year blended metric. So when we look at Bitcoin, we look at the 200-week simple moving average. And that way we take a 4-year cycle view and we consider how is it trading versus the 4-year average. I think that MSTR is going to be more volatile than that. So I think the whole point of the equity is to generate the amplification. And so if we were to pay the dividend, we would be actually undermining the equity value proposition, and we'd be undermining the credit value proposition. And the reason that the equity is so volatile is because we sell the credit. And the reason that we're working hard to build a balance sheet is because the company's future is based upon the credit. If we can sell $10 billion a year worth of STRC, and if BTC outperforms our hurdle rate, it's about 10%, 10.5% right now, then the $10 billion of credit that we sold starts to look like net income to the common stock equity holders. So that being the case, you'll get a multiple on the credit sales. If there are no credit sales, then there isn't anything to multiply. And so
And that's why the credit is the product for the company. Okay. So understand what they're doing. They're selling a preferred equity like STRC stretch that pays a 12% dividend on the instrument, right? So if you put $100 into stretch, you're going to get $12 a year from that $100. Okay. Now, the thing is, they use that $100 that you give them and they purchase Bitcoin with it. Now, the compound annual growth rate on average for Bitcoin has been 30, 40, 50% a year. So let's just say it's 40%. Well, if you give them $100 and they purchase Bitcoin with it, and Bitcoin is appreciating at a CAGR, at a compound annual growth rate of 40%, right? From that 40%, they're giving you 12%, and then they're keeping 28% of additional of the gains or the appreciation of that Bitcoin that they used to buy your $100 with. Okay. And that would go as net income or into the MSTR shareholders, therefore increasing MSTR shareholder value and the price of MSTR. So that's what he's saying.
Important thing is for us to stabilize the credit business and to build the most sustainable, highest quality credit business that we can. And so the equity will actually come later, right? We're in investment mode to build the credit. If we do the things that are good for the equity in the near term, they're bad for the equity over the long term. And on the other hand, if we do the things that are good for the credit in the near term, that will be good for the equity. So ultimately, the product of the company is the credit. And the better the credit is, the more valuable the company is. And we think the company will be very, very valuable if we make the credit, especially STRC, successful. So we're making a long-term investment. It's not unlike Netflix or Amazon. When Amazon was building out Amazon Prime, they were providing cheap shipping and or free shipping for a long period of time, and people thought it was not great for the equity. But at the point where everybody in the country is subscribed to the product and they all use the product, then Amazon won the market. And our view is the same. We want to win the digital credit market, and ultimately we want to create the world's best credit. And if we do that, then the primary beneficiaries will be the equity holders, of which I'm a big one. I have more than 19 million shares of the equity. So I feel your pain, but
What Michael Saylor just said there, he's like, listen, bro, this is Michael Saylor's brain right now. He says, I own 19 million shares of Strategy. Like, I own 19 million shares of the equity. Like, trust me, bro. I felt the pain too when it went from $5.45 to now at $98. $98. Like, I'm sorry what happened to your kids with your 73 grand. Like, I get it. We're trying to run a company here and we're trying to make it successful, and there's going to be ups and downs, but like, don't think that I'm over here, you know, not thinking about my bag too, and thinking about my success too, and thinking about the success of my company as well, right? I'm thinking about everybody's success, but like, if he owns 19 million shares, think about the math on that. Multiply 19 million by 545, whatever number that gives you, right? And then multiply 19 million by $98 a share, $100 a share, okay? And then divide that first number by the second number, and that's how much money he has lost on paper, right, during this bear market. So he understands where you're coming from.
We have to be prepared to have difficult years. It might be 1 year, it might be 2 years. We wouldn't think it would be 4 years, but we might have to actually ride through some number of months or a year or two in order to get to the point where things start to work to the benefit of the equity.
Multiple investors pointed out that you recently sold Bitcoin and you recently purchased back STRC. Are there any plans to buy back MSTR?
No. I mean, I'm assuming the answer to that is no. Let's get through this ad, and then we'll see the answer. Oh man, this is one of those sad
It's hard for us to imagine a life with dirty water.
I think we're open to buying back MSTR if it trades at a discount to NAV, or if it's the right thing for the company to do. We evaluate all these programs
Okay.
week by week, day by day. Right now, STRC is trading at a discount to par, so it's a pretty obvious thing for us to do. And MSTR is not trading at a discount to NAV.
All right.
So
answer.
we're prepared to do it at some point if we needed to. If MSTR is trading at a very, very deep discount to NAV, then probably you would see us do something like that. But right now, it's not the highest priority of the company. The best thing we could do right now is fix the credit. If we fix the credit, the equity premium should expand, and that will be good for the equity. If we take the capital that we could use to fix the credit and start buying back the equity, that would be credit negative. And if it's credit negative and the credit business weakens, then even if you were trying to buy the equity in the open market, it would be weakening, because the fundamental question is the credit business worth 100 billion or $1 trillion? If there is
Yes.
no credit business, the answer is no, it's worth zero. But if there is a credit business, then there's just a debate over whether or not it's worth 50 billion or 100 billion or 250 billion or $1 trillion. And so the single most important thing for us to do is make the credit work. And right now we're allocating our capital to doing that.
Okay, so fix the credit, fix the equity. Phong, this question is from Johannes Schmidt. CEO Phong Lee has cited JP Morgan as a model for how strategy should evolve for digital credit. Yet Bitcoin's entire philosophy was designed as a direct alternative to the centralized, trust-based banking system that JP Morgan represents. Doesn't modeling Strategy's business, including STRC, after a centralized institution like JP Morgan contradict the decentralized principles that Bitcoin was built on? And how do you reconcile pursuing a JP Morgan style corporate structure while staying true to Bitcoin's founding philosophy?
Yeah, let me address that, but I do want to follow up on the previous question, because I think there is this misconceived notion that issuing our equity is dilutive to our shareholders. If we sell digital credit, STRC, and we issue equity to pay the dividend, it's highly accretive to our shareholders. If we issue equity that's greater than 1x NAV, MNAV, and we're currently about 1.07 to buy Bitcoin, that's actually accretive to our shareholders because it increases Bitcoin per share. If we issue equity to buy back STRC at a discount at which we issued it, so if we issue STRC at $100, we issue equity above 1x MNAV, and we buy STRC back at $95, that's also accretive to our shareholders. It's accretive to Bitcoin per share. That's what matters. So I just want to make sure that that's understood, because a lot of times people are like, Saylor's hitting the ATM, that's dilutive to shareholders, and that's not necessarily correct on a Bitcoin per share basis.
And the last trade is that we saw the
And by the way, understand that what they're saying, when you have a company on a Bitcoin standard, what they're saying about Bitcoin per share is the amount of Satoshis, right? One Bitcoin has 100 million Satoshis in it, right? Think about a dollar has 100 pennies, right? So one Bitcoin is divisible into 100 million Satoshis. So what they mean by Bitcoin per share, or increasing Bitcoin per share, is how many Satoshis, right? Or how much of a Bitcoin do you purchase each time you buy a share of MSTR? Or if you hold an MSTR, the equity, how much more of a Bitcoin that share that you own has over time, and that amount of a Bitcoin increasing over time. That's what they mean by increasing Bitcoin per share, right? The amount of Bitcoin that you're buying per share of MSTR. Okay, that's what increasing Bitcoin per share means.
at a premium to NAV to buy US dollars, that's also accretive to the shareholders.
Yeah.
So all the trades we're doing are accretive. They're strengthening the balance sheet of the company. They're strengthening the company. They're improving our long-term prospects.
Yeah. We don't want to be JP Morgan. We want to be the JP Morgan of digital.
Oh my God, what is up with these ads, man?
If you hate applying to jobs, this is going to change your life. It's called Perplexity Computer. You connect your Gmail, upload your resume, and just
assets, right? And which is a big difference, right? Like there are a lot of things to admire about JP Morgan. They're the most valuable bank in the world. We would like to be the most valuable digital asset company in the world, right? They have a great amount of trust, a great amount of equity value. We would love to have the amount of trust and equity value in the digital asset world that JP Morgan has in the traditional banking world. They are one of the largest players in the repo market, right? They're a bank that the federal government turns to at times for assistance if it's needed. We want to have that level of trust and scale in the digital asset world. But we're not modeling our business after JP Morgan. The analogy is we want to be the largest and most important player in the digital asset world. That starts with holding the most Bitcoin in the world, which we have now at 4%. That continues with building products on top of Bitcoin, like digital equity, which is MSTR, digital credit, which is STRC. And it continues with then having other players in the digital asset world build products on top of ours, like digital money, which Mike mentioned earlier. So we believe that being the largest holder of Bitcoin allows us to have the stature that JP Morgan has, but we're not modeling our business after that. So that was really the point there. It's much like when Mike says that STRC is the iPhone, our iPhone moment. Obviously, we're not trying to build a business modeled after the iPhone or Apple, but the iPhone is the most successful product in the history of the world. And we think STRC can be the most successful digital credit product in the world.
This next question comes from @grainofsalt. Would strategy sell STRC?
With that last question, guys, people have to stop getting their panties all up in a wad over analogies. Understand that Bitcoin and strategy are trying to take over something that is so incredibly entrenched in the minds and the lives and the livelihoods and the day-to-day of people, which is dollars, man, money, right? Like going to the bank, getting a loan from the bank. So if you're trying to overtake that market, you have to frame analogies for people on something they understand when you're bringing up something that they don't understand at all, which 99.9% of people, I guarantee you, don't understand Bitcoin. I mean, I talk to people about Bitcoin every single day, every day. Okay, and it takes time. It takes time. And using analogies like saying, "Oh, we want to be the JP Morgan of Bitcoin." It's not saying that they want to be like Phong Lee just said. He's the CEO of the company. It's not saying we want to be a fiat bank. What he's using analogies to help people understand the direction of the company or the vision of the company and what it is that they're trying to do with their digital capital stack, which is Bitcoin. Come on, everybody. We got to use analogies here if we're gonna frame all these things in ways that people understand. All right.
And use the proceeds for a cash reserve and MSTR buybacks in addition to buying Bitcoin. This was suggested in the Q1 earnings presentation, and is it still a viable option?
Sure. Yeah, we could use the capital we could swap STRC for MSTR, we can swap STRC for USD, we can swap STRC for BTC. We could swap STRC for any other debt instrument or credit instrument outstanding. So there are probably other things we could do with it as well, but we're very open-minded about how we use the capital.
Next question is from Garrett. What is your stance on MSCI's recent rule change proposal to remove Bitcoin treasury companies from their index? And what do you expect this removal would do to the stock prices?
I can start with the latter, right? MSCI indices represent somewhere between 3 and 4% of our current shares. If we were to be excluded from their indices, then you could expect that to create some selling pressure over a period of time. But it's really immaterial to us, right? Like 3 to 4% isn't something that is going to cause a major change in our share price over a period of time. So I would call it immaterial, and to Bitcoin, it's even less important, right? 0.1% perhaps, if you include what we hold in terms of Bitcoin. More importantly, I don't think MSCI is aligned with the US government, the world markets, or other indices. I think the fact that they're taking a second cut at this is a bit ill-advised. They've taken a different approach to it, which is to redefine what an operating.
So if you guys don't know, MSCI is a stock index that you can buy. All right. I believe is a Morgan Stanley who issues it or who controls it, the fund. And they continue to just absolutely berate and to threaten to take strategy off of the MSCI index, right? And like Phong Lee just said, I mean, it would be 3 to 4% of the total ownership of Strategy's outstanding shares. And yeah, it would create selling pressure, like Phong Lee just said. But honestly, it's immaterial, and I'm done with those guys like just kind of like threatening the company and being like, "Oh, we're gonna kick you off our index." Like, all right, bro, just do it. Just do it so us as shareholders can get some more shares at a discount, man. God, it's just the regular capital markets are just so incredibly annoying, man. Annoying. And Strategy they honestly do run one of the cleanest and most honest balance sheets in the public markets, and they continue to just get freaking dogged on by these big dogs who do nothing but illicit shit behind the scenes, making it seem like Strategy are the ones that like shouldn't be on their indices because they're not an operating business. Like, ridiculous, man. Ridiculous.
Asset is the SEC and FASB have defined what an operating asset is for Strategy, and Bitcoin certainly is that. They don't see Bitcoin as an operating asset, so I think they're sort of taking a position against general accepted accounting principles in the SEC. And so we'll go back and we'll respond to them and try to understand better why they're taking this approach that's antagonistic to Bitcoin in the asset class. And I think they will consider our responses and others and be constructive about this and hopefully not move forward with their latest proposal. But even if they do, right, I don't think it's that important to us in the end.
All right, this question comes from Sergio. Could Strategy eventually build a $20 to $30 billion USD reserve, mainly through STRC, to deploy aggressively during future bear markets? And could a larger cash buffer also strengthen the case for S&P 500 inclusion?
I think we'll always carry large cash balances going forward, and over time we expect the U.S. dollar reserve balances to grow. We expect BTC reserves to grow. We expect the operating cash or U.S. cash balance that's unrestricted to grow, and we will use that opportunistically.
Sorry about
I
the
just
ads,
created a
guys.
$47 ebook in 3 minutes flat using AI. Time me while I do it again. Already in Designer, interfaces load.
All right, guys, we're about halfway. We're getting there.
To buy back our credit, buy back our stock, or buy back our debt, or buy Bitcoin whenever we think it makes sense. So the company's optionality is growing, and at this point, we would expect we'll just keep getting larger from here, and we will have more trading options than we've had in the past.
And on the question around S&P inclusion, I mean, there's two different things here. One is S&P, the ratings. The second is S&P, the index. On the ratings, right, we currently have a B- corporate rating. I think increasing the cash reserve will help with that, right, and could over time improve our rating. Ultimately, what will improve the rating is whether they deem Bitcoin as capital that we have in our balance sheet. Right now, they see it as not true capital, and it's rated,
And that's true, right? The major indices, the S&P 500 and a lot of the other ones, they were counting the 845 some odd thousand Bitcoin that Strategy has on their balance sheet with tens of billions of dollars as a zero on the balance sheet, because for the longest time, Michael Saylor, Phong Lee, Strategy, they would say they would never sell Bitcoin, right? So the indices, they were like, well, if you're never going to sell your Bitcoin, then we're going to count it as zero on your balance sheet. And then they gave them a B- rating, which their rating should be like in the A's. So one of the big reasons why Strategy has been selling Bitcoin, and small amounts of it, by the way, I think they sold a total of like almost 2,000 Bitcoin in like the past like few months, is because they're trying to prove that Bitcoin is operating an operating capital. It's operating capital for the company, and it should be deemed at face value for whatever each Bitcoin is worth cumulatively on their balance sheet. And they are doing that, and they're trying to get fair ratings here from these assholes, man. So that's what's going on there, if you guys weren't tracking.
Value. If that changes, then our rating will go up, and that's probably the most important thing, more important than having US dollars. Index inclusion, I don't think, is directly correlated to the US dollars on our balance sheet.
Jerry asks, is the focus permanently on Bitcoin per share accretion via financing, or could opportunistic spot purchases play a larger role in supporting liquidity and price discovery going forward?
Our primary focus is to create digital credit that strips a large portion of the volatility off of Bitcoin and extracts a yield. And so that's STRC. We're not really traders. We think that that market, which is the digital credit market right now, is about $15 billion. We think it can become $100 billion, then $200 billion, then $400 billion, then $1 trillion. So the business of the company is to create the credit. The trade that we're making is we're willing to bet that Bitcoin will outperform our hurdle rate. Right now, our hurdle rate is 10.5 or something. We update it on our website every 15 seconds. The duration of the company, the duration is like 33 years. And so the business of the company is we're sort of betting sometime over the next 10 to 30 years that we're right? And we're not really traders, from day to day. So we're not, the reason you should buy the equity is not because we trade Bitcoin. If you really think that you found someone that can trade Bitcoin really well, you should invest in their private fund. The reason you should buy the equity is because the company has $60 billion of capital and can create 5 or 10 or $20 billion a year of credit. And if Bitcoin beats the hurdle rate, that means the company makes 20 billion a year. And if you want to own a company that makes 20 billion a year that can grow 30% a year, then we're that company, right? So if you believe in digital credit, then you would look at it and say, okay, well, the company that can do that is very valuable. I think that as a practical matter, we will hold more cash, and if Bitcoin is trading at a extreme premium to the 200-week moving average, we'll probably tend to acquire cash rather than BTC when we sell credit. And if Bitcoin is trading at a low premium or a discount to the 200-week moving average, we'd probably lean toward a bit more BTC than cash. So I think that where Bitcoin is in the cycle may drive our cash to BTC allocations. But ultimately, we're not traders. And I think what people oftentimes they miss is they don't realize that in a bull market, our equity premiums expand. So demand for the equity expands, the equity premium expands, demand for the credit expands, the credit risk on the credit falls. And so both the equity and the credit businesses explode and capital flows to the company. So in a bull market, when the Bitcoin price is rising or is high, we will tend to have a lot more capital come in the door, and therefore we'll buy a lot more Bitcoin because that's when the capital comes. And in a bear market, when Bitcoin is crashing, the equity premiums compress and the credit weakens, and there's less demand for the credit and there's less demand for the equity. And so we will tend to buy less Bitcoin in a weak Bitcoin market than in a strong market. But at the end of the day, if we're selling the equity at a premium to the underlying Bitcoin, right? If Bitcoin rallies and we're selling the equity at a massive premium, the fact that we paid double when we sold the equity for triple, isn't a problem. It was still accretive to the company. So the price of Bitcoin when we're swapping equity for Bitcoin doesn't matter. And the price of Bitcoin when we swap credit for Bitcoin only matters over the duration of the credit. So
Yeah. Great
Hey, have you been researching
great
dental
explanation
implants? Did you know you can now get permanent teeth in just 24 hours? With most traditional dental
over a decade, if we're wrong, then we'll be wrong in 10 years on the credit. But with the equity, we can never be wrong. Like if Bitcoin rallies and our equity premium expands, we could pay $1 million a coin for Bitcoin, and we'd pay for it with a massive, stock price of 25,000 a share. We'd swap it. Bitcoin might crash from $1 million to 200,000, and people would say you're crazy. You bought it 5x more than it is. But the point is,
From your mouth to God's ears, Michael Saylor. 25,000 a share. I love that. Retire tomorrow.
Equity for the Bitcoin at the top of the market. And so and at the bottom of the market, the question is not, well, did Bitcoin draw down? The question is, over the next 10 years, will Bitcoin outperform our hurdle rate or the cost of the credit? And at the end of the 10 years, we'll know. So we're long-term thinkers. We're not short-term traders. And the amount of acquisition of dollars or Bitcoin or the amount of capital markets activity we engage in is really dictated by the capital markets. That's Bitcoin. Bitcoin is capital. The credit markets, that's the demand for STRC. And then the equity markets, the demand for MSTR, and even to a certain degree, the derivatives market. So those capital markets, they're all moving independently, and sometimes they're correlated. And we are participating in all of them every day, and so that's the key thing to keep in mind when you consider what will we do and why do we do what we do.
All right, we are a little over halfway through this Q&A session. I'm going to take a question from our live audience. This one's from Tim Fiaca. What do you think of the business model to acquire cash flowing businesses backed by Bitcoin treasuries like Orange Juice? Do you see yourself adopting some sort of cash flowing business model in the future? And what are your thoughts on the potential benefit of cash flow for MSTR?
We won't do it. It's a perfectly fine business model for other people to do. I mean, for Orange Juice, it's perfectly fine. And there are other businesses that are in the business, and there are investors that are in the business of acquiring cash flowing business. So that's their business model. Our business model is to create digital credit. And if we were to start to divert from that, we would be distracting ourselves or diluting our focus. And so it creates all sorts of operational complications of different types. It would undermine the equity. It would be harder for equity investors to properly handicap and trade the equity, because we would be creating heterogeneous performance in the equity. You would have to have a forecast, or you'd have to have an opinion on every single thing we owned. Right now, if you're an equity investor, you just have to have a model for BTC. It would also undermine the derivatives markets. And so people that trade the call options and the put options, and that's a massive, $30-40 billion interest business, they would be undermined if we started to diversify into cash flowing business. And it would also undermine the credit, because now instead of having a homogeneous credit model where you can recalculate the credit risk every 15 seconds, you would now have to create a heterogeneous credit model where you consider the credit risk that is implied by bolting on another business to our existing business. And so we think it would be dilutive. It's a dilutive distraction for us. That's why we don't do it. We're laser focused on our business.
Now, I love hearing this from a team, right? When you invest in strategy, you're investing in strategy in MSTR because of their Bitcoin focused play. And what he is saying is there's too many companies out there that distract themselves with buying this company and trying to figure everything out. He wants to be a pure Bitcoin play. And for you to be able to look at the balance sheet and decide whether you want to long it, whether you want to short it, whether you want to buy the equity, whether you want to buy the credit, that's what he wants, right? And he wants to be a pure Bitcoin play. And that's why, for example, investors like me buy MSTR, and I buy MSTR because to me it is a pure Bitcoin play, and I can understand it. As a Bitcoin investor, I can understand MSTR, and that's why I buy MSTR. And that's why I have the conviction that I have in MSTR, right? So what he just said is saying, I'm going to have the best interest in mind of the people who support me, who are Bitcoiners, and people who believe in Bitcoin, and people who believe in this capital structure, which is a Bitcoin-focused, homogeneous capital structure, Bitcoin only, right? Bitcoin only. So I love hearing that from the guy who's in charge of running this whole thing. So increases confidence for me.
Model, which we think is the best business model that we could possibly execute on.
All right, let's pivot some questions to specifically digital credit. What lessons has the management team learned from the recent STRC drawdown and recovery that could be applied to increase adoption moving forward?
Great question.
Phong, you want to take that?
I'll start with the biggest lesson is the importance of having US dollar liquidity on our balance sheet as a backstop to the dividends, right? And that's why we now have $4.8 billion of US dollars I think that's the biggest lesson, and we'll apply that going forward, right? The question of would we use Stretch for something other than Bitcoin? Yeah, potentially when we raise money from Stretch going forward, we would add to the US dollar reserve or some other form of US dollar liquidity so that we backstop the dividends and we create confidence in institutional investors, especially buying into Stretch.
Yeah, I would say we learned we have to be prepared to buy or sell anything at any time. So the company needs to be able to sell Bitcoin as well as buy Bitcoin for the Bitcoin to be fairly valued. And if we're not willing to sell it, then the credit is not fairly valued, because if we're not willing to sell the Bitcoin to fund the credit dividends, then that's credit negative. So we have to be able to trade BTC. We also realize that if we want to stabilize STRC, we have to be prepared to buy it as well as sell it. So we were very good at selling STRC at 100, and we were very good at buying BTC, but now we have illustrated to the market that we can sell BTC and we can buy STRC. So it's kind of like, you can't just have a right hand, you got to have a left hand and a right hand, or maybe the car has to be able to turn left and turn right. And I think,
fair enough.
I think that we also, to Fong's point, we have to show that we can dynamically manage our reserves, and the US dollar reserve, the unrestricted cash, the restricted cash, and the BTC. And all of those things were important. I think the other important thing we learned is we need to have a focus upon the capital structure, and we need to keep improving the capital structure, and we need to keep a laser-like focus upon the quality of the capital structure if we're going to grow the credit business.
Phong, when we were on stage in Las Vegas for the Bitcoin conference, you talked about how 80% of Stretch holders at the time were retail. This question comes from Stuart. He said, recently I have seen you post about huge allocations from institutional funds to STRC. Why did retail lead the way on the product, and why are institutions now coming around, and what is the split now?
I think anytime you have a new product category, digital credit being one of them, retail tends to be the early adopters. Institutional, especially in something like digital credit, they want to see 1, 2, sometimes even 3 years of track record of the product paying dividends. They want to see track record in the price, so they tend to lag. What's interesting is that 80-20 is now 70-30. By the way, it doesn't mean that retail declined. Retail doubled. Institutions just increased significantly over that time. So we're already seeing institutional adoption start to increase. I think our digital credit capital framework created more confidence in institutions. And as good as it is to have retail, institutions tend to be longer term holders. They tend to take on less leverage, and so they'll stabilize Stretch over time.
We've had a couple of investors curious about whether STRC could move to daily dividends like SATA, and whether other preferreds will move to monthly dividends or daily dividends.
Right now, we don't have a plan to change the other preferreds. The STRD, E, F, and K are all institutional offerings, and the institutions that are holding them have been comfortable with the quarterly payout, and so we expect that'll remain that way for the foreseeable future. We're watching SATA, cheerfully and enthusiastically, but we don't have any plans to go to daily dividends at this point. Our primary focus is on improving the credit quality of STRC and focusing upon the balance sheet of the company. Phong, you have any thoughts on this?
No, that's it. I think daily dividends is an interesting concept, and we're watching SATA, but semi-monthly seems to be quite powerful with our investor base.
We've got several STRK investors. One of them from the live chat wants to know if you would consider buying back STRK.
The Crisco lie they told us in the
Oh my
1950s.
You know, Crisco, it was originally a candle wax replacement, not cooking oil. So why did everybody cook with Crisco? Well,
Right now, our focus is on returning STRC to health. So you can expect we'll be laser-like on that. After STRC returns to health, then we want that credit instrument to be stable and to grow in a predictable fashion, and so that's our focus right now. After that, then we'll look at all the other instruments and consider if there's an appropriate thing to do for the investors in the company. We think, by the way, the best thing we can do for an STRK investor or or any other investor is to return STRC to health, right? Because the things that we're doing that are good for STRC are also good for STRK.
A question came in from John Lee Dumas. Under what circumstances would strategy be comfortable letting STRC trade materially above $101
Never.
rather than taking actions to bring it back to par? And what would...
I don't know what Michael Saylor is going to say, but it would not be healthy at all for STRC for them to let STRC trade above par, above 100, materially above 100. That instrument needs to trade between 99 and 100 and stay right there. Not down, not up. 99, between 99 and 100. It goes above 100, you sell the crap out of it until it goes back to 100. Heck no.
strategic rationale for allowing that premium to persist?
We won't do that. It's our target range is 99 to 100, but we have no interest in allowing it to trade substantially above 100. And the reason why is this. The important investor proposition is when it gets to 100, you can sell it at 100 and you won't be leaving money on the table. And then you can buy it at 100, right? And then you can buy pretty much whatever amount you need at $100 and a penny, and you can sell into the market at 100. And if we allow the price to fluctuate, plus or minus X dollars, then you paralyze the market. So someone that was thinking about selling at 100 would think, well, maybe I shouldn't because it might go to 102 or 101. And so instead of making a decision in 15 seconds to sell it, they would be paralyzed. If you actually look at the impact, if it trades between 95 and 105, people might very well take 3 months to make a decision that they would make in 3 seconds if it trades stably. And on the other hand, we've seen examples where if people aren't sure if it was trading at $100.50 and they thought it might come back to 100, they might put in a limit order and wait for 4 days. Mm-hmm. And so if your bank told you that when you actually take money out of the bank, they might just arbitrarily only give you 99% of your money and keep 1%, you'd be very angry. And if they said, well, on certain days, you might actually be able to get it all. And on random days, you might get 1% more than the money in the bank. And so that would drive everybody insane if you randomly got plus or minus 1% of what you thought you should get. And so the primary value added of the company, right? The reason that we're here is to strip the volatility off the instrument and extract the yield. Mm-hmm. So if I use an example of like Standard Oil, okay, I have a barrel of crude oil and I create kerosene, and the reason it was called Standard was because it was the kerosene that didn't blow up in your face. And so if someone came along and said, 1 out of 100 gallons of the kerosene blows up in people's faces, and, should we just go ahead and ship that one? And then we'll put a little disclaimer on the can that says you need to test this before you use it. It's like people would say, that's not a good business. It's not 1% less good. It's like 100 times less good. Mm-hmm. So what we're doing is creating the very best credit we can create. And in this particular case, I think the value proposition to the investor is the company is going to create liquidity around par as much as you need. If you wanted to buy $1 billion of this, we're not going to make you pay $110 a share. We're going to sell it to you at $100 and a penny or $100, So that's a value, and that would cause someone to come in. And on the other hand, somebody wants to know that if they sold at 100, they didn't make a mistake. And also, if this thing falls below par and it falls to 95 or 90, the company is going to use all of its resources to bring it back to the trading range and to bring it back to par, right? That's what we're going to do. And so if we're ambiguous or unclear about that, then we have broken the promise, right? We have undermined the value proposition of the instrument. The instrument is to be the lowest volatility, highest liquidity, most predictable credit instrument in the digital credit market, right? And we want to create the best credit instrument we can possibly create. And so allowing it to flex, and rattle around is an abrogation of that responsibility. But I'll make one more point. The people that say that, sometimes they say, well, you should do that because that's like bad for the shorts. Like if you let it float up to 101 or 102 or 103, people won't want to short it. We're putting the interest of the $10 billion of credit investors ahead of the interest of the $300 million of short investors. Like the point is run this program to the benefit of the people that buy the credit and hold the credit, as opposed to worry about the short sellers. Our view is, even if someone shorted STRC at $100, that's good for us. Like we welcome that. And because if someone wants to come in the market and pay 12% dividend to create liquidity, and then they're going to put their balance sheet and post their balance sheet to build digital credit, we actually think that's good for the ecosystem. So we're not trying to discourage short selling. If someone wants to short $10 billion of this thing when it hits 100, then we will have $10 billion of credit, and someone else will be paying 12% interest on their 10 billion. And so you can see someone else will be paying $1.2 billion of dividends to make STRC a $20 billion AUM instrument. So we just don't see a logical reason why you wouldn't, run a very disciplined program to strip the maximum amount of volatility off the instrument. That is consistent with the highest liquidity. And since that's the highest liquidity, that makes it the best credit instrument. And if it's the best credit instrument, then the demand is going to be higher. Everybody wants the best thing. And then if the demand is higher, that's good for the common stock, and it's good for the company, and it's good for everybody else. So we're going to create the best possible product we can create, and we're not going to worry about how someone might view it if they're a short seller, one way or the other. By the way, Natalie, if somebody really wants a product that will trade between 95 and 105, we have one. It's called STRF. Well, by the way, it's actually less risky. It's more collateralized, it's longer duration. If you're a long duration credit investor and you want something that might trade above 100, then I would encourage everyone to buy STRF, because it was designed to literally do that. And what you'll see is, if you look at it, is the demand and the liquidity for it is 20x less than STRC. So if people are wondering what would happen if the company let STRC trade like STRF, what would happen is the demand for the instrument would fall by an order of magnitude, and the liquidity would collapse. And when that happened, confidence would collapse. So in my opinion, it's not a good idea to let the instrument float randomly around.
I hope you heard that wonderful explanation by Michael Saylor as to why you would never let an instrument like STRC stretch run way past 100, right? The moment that thing hits $100 and a penny, they sell the crap out of it, right? Or between 99 and 100. And he just explained to you all the reasons why they're not going to allow that to happen. Okay, just like trading materially below 100, they're not going to allow that to happen, and they're going to put things in place to get it back up to par. In the case of a bear market like we're going through right now, it's almost at par again. I think it's at $95, right? So another $5 to go, and then they can sell STRC again to credit investors, individual and institutional alike. So great answer there. I'm glad he said it, because otherwise, like, if he had said, yeah, we're going to let STRC run above 100, everybody would have sold their STRC shares, man. Everybody. So great answer.
All right, thanks so much for that, Michael. We have about 10 minutes left. I'm going to try to get through as many questions. I know a lot are still coming in. So if we can keep the answers a little bit more concise, just so we can get through a couple. Starting with Osama and Eric both asked, Michael previously suggested that Bitcoin could reach 1 million per coin if Strategy accumulated 5% of the total Bitcoin supply and potentially 10 million a coin at 7%. Have your long-term price expectations and assumptions evolved given that the price is lower now than in November 2021 when Strategy owned about 120,000 Bitcoin?
They don't know. They don't. They don't know. They're not. They
You know, we
can't
don't
see the
have a
future.
precise forecast for when those prices get hit. We know directionally that the more Bitcoin we buy, the better it is for Bitcoin. We're in the middle of a bear market right now.
The reason why directionally they can say, like, the more Bitcoin we buy, the better it is going to be for the Bitcoin ecosystem and the Bitcoin price is because Bitcoin, there's only going to be 21 million of them, right? So the more they buy, the more they take out of the capital markets, right? Or the Bitcoin that's available to purchase, right? Therefore, demand keeps increasing, supply keeps decreasing over time, price goes up, right? So that's why he says directionally, like, this is what it's going to do.
Things are a bit harder and the going is a bit tougher, but we will continue to acquire Bitcoin, and we think, again, if you're a short-term price predictor, you're a trader, I don't really have much useful wisdom for you. My advice is don't invest in Bitcoin unless you're going to hold it for more than 4 years. Ideally, hold it for 10 years. And what we think is
ideally hold it forever, right? Or ideally always be a net buyer of Bitcoin instead of a net seller, right? So every year have more Bitcoin than you had the year before. Sometimes you have to sell it to pay a bill and stuff like that, obviously, man. But be a net buyer of Bitcoin. Not financial advice. This is all financial entertainment.
Bitcoin we buy, the higher the price will go. And we remain bullish on the asset over time.
This question is from William. Phong, maybe you can take this one. Frontier AI models have identified security vulnerabilities in many kinds of software systems. How is the company thinking about this threat with respect to Bitcoin custody, and what are you doing about it?
Well, I'll start with we custody with.
That is a wonderful question, especially after the cold card hack, which I'll do a whole entire video on that, where $130 million worth of Bitcoin were stolen from a cold card by CoinKai, which was seen as the Bitcoin maxis epitome of, like, you know, sovereign, self-storage Bitcoin, and they got hacked, and it rocked the Bitcoin community. Didn't rock the price, which is why once that happened and it didn't rock the price, I was like, okay, we probably have bottomed in Bitcoin. And Bitcoin was at 64,000 and didn't move when those news came. But amazing question, because honestly, we need to figure out the self-custody thing.
We have the largest institutional grade custodians in the world. And we sit down with them all on a regular basis and go through what are some of their security measures that they have in place, both related to their software and their hardware, related to their personnel and their automation. And by the way, these are the same custodians that custody most of the Bitcoin ETFs in the world. So they're evaluated by a lot of folks. We have advocated for all of them and just the open source Bitcoin community in general to have access to the frontier models. Some of them do, and they do run the frontier models against some of their software. We're starting to do that too. So I'd say rest assured, Bitcoin security and custody is probably the most important thing beyond our Bitcoin capital planning in the company. and we take it pretty seriously. And I'm sure some have seen, we've also become part of the Bitcoin Security Consortium, which puts together some of the largest Bitcoin custodians, issuers, exchanges, holders, banks in the world. And we're working together with them too, and taking sort of the strength of all of our institutions to work on this together.
This question is from Jim. It's directed to you, Michael. Did you ever believe in Bitcoin's ethos of separating money from state, regardless of how long that takes? And could you pay dividends in Bitcoin rather than the US dollar?
Well, I think Bitcoin's valuable because it's a non-sovereign store of value, just like gold. And so it does, it separates capital, it separates money from state. And the larger it gets, the greater portion of the global capital is sitting in a non-sovereign digital asset. So that's why we're enthusiastic. We don't have any plans to pay a Bitcoin dividend. We think that the wise trade, given the fact that 99.9% of the money in the world is in fiat and 0.1% of the money in the world is in Bitcoin, the smart trade is to sell credit and pay the dividend in fiat currency and to buy BTC. If BTC is appreciating 30% a year, we expect it will always appreciate, say, faster than the S&P index. The credit rates are all much, much lower. And so we would rather pay 10 and collect 30. If we were to pay a Bitcoin dividend, we would be paying 30 to collect 10. So the problem with paying Bitcoin dividends is your cost of capital becomes the strongest money. It's kind of like agreeing to pay 30% yield and then investing in a bond from a country that pays you 4%. And so it's kind of if you get the trade that direction, it's the wrong direction, you'll go bankrupt. And so I don't recommend it to anybody. The right thing to do is to borrow money in dollars or yen and to invest it in BTC. And that way you're capturing the spread in the right direction. And of course, there's 1,000x more money to borrow in yen and dollars than there is money to borrow in BTC. So it makes sense to issue fiat credit instruments and buy digital assets like BTC. The opposite direction doesn't really make economic or financial sense.
You ever wonder why your car starts smelling weird every summer? Watch this.
Now, understand what he just said there, right? What he basically just told you is that he believes that Bitcoin is the hardest money and that dollars are depreciating against Bitcoin, right? So if you issue fiat denominated credit instruments in order to buy Bitcoin, you're on the right side of the trade because now you own Bitcoin, you pay out the credit instruments in fiat currencies, you have an appreciating currency versus the liability that you have on the balance sheet is in fiat. Your asset is valuing at a faster rate, and this is depreciating at a faster rate, and you're catching the spread. You're on the right side of the trade. If you were to, the question was, are you ever going to pay Bitcoin dividends or dividends in Bitcoin? And the answer is, if I was doing that with the hardest part of my capital stack, I would be on the losing part of the trade, right? Because then I wouldn't capture that spread. The key here is you pay out in dollars, which are depreciating at at a faster and faster rate every single year, and you hold the Bitcoin that is appreciating at a faster and faster rate every year, right? That's the whole business model. So it wouldn't work the other way around.
Question is from Anthony. Earlier this year, there were advertising campaigns for STRC on X created using AI. Some of the advertisements included.
Before she asked this question, I hated the AI commercials, right? I understand what they were trying to do, trying to go with the times and stuff like that, maybe trying to cut costs on advertising and things of that nature, right? But it seemed unserious at the time, and I wasn't a big fan of it, but let's see what they say.
Retired engineer lady on the beach resort, that this is Spinal Tap parody and a mock-up of some traders discussing STRC. What were the results of the advertising campaign, and is the strategy satisfied with the results?
Well, some of the results were the number of views that we looked at, click-through rates, people who came to our website, dwell time on our websites. So if you look at those as metrics, they were all quite positive. And I do think it led to greater retail adoption of Stretch. So, and look, just using AI and discovering all the capabilities it had was fun, and it created a narrative. So I think overall, I was fairly satisfied with the results of the campaign. That said, if we think that institutions are a greater target for STRC, then I don't think those advertisements are really getting to the, causing them to buy the instruments. It makes them aware.
All right. I know a lot of people are always on the watch for your upcoming AI videos, Michael. We're going to end this with a little bit of a lighter note. We got a question from Jay asking what you guys do to unwind. Do you play video games? Do you play sports or have any hobbies that you can share? Have a great day from Jay.
We create and post AI videos promoting Bitcoin in different languages lately. That's been the most fun. Me speaking Korean, Japanese, Italian, and French.
That's right. And I think I heard you say on a show, Michael, or during an interview that, a picture can say 1,000 words, right? And these images sometimes reach more people than, say, a quarterly earnings call or a book, for example, right? You can reach a lot of people and not even necessarily have to say anything. The video or the photo speaks for itself.
I do some fun things, Natalie. I know Mike just only works, but I do some fun things. I have 3 kids, a wife that I love to spend time with and travel with. I play basketball. I love to cook, as you know. And I do play video games and watch mindless shows from time to time, but I try to be pretty fastidious about protecting my time from doing things that don't create much value.
Guard your time. That's one of your 10 pieces of advice, Michael. That brings us right to the end of our Q&A session. Michael and Phong, thank you so much both for sitting in the hot seat and taking the questions. Thank you to everyone who submitted one. We received far more than we could possibly get through today, so hopefully we'll have another Q&A session soon, and we really appreciate everyone who took the time to participate. If you did miss any part of the conversation, again, the full replay will be available on Strategy's account, and I will also be airing it on the Coins.
All right, you guys. So that's the call. It was a Q&A. The actual quarterly earnings calls are a lot more dry than that. Maybe one of these days I'll cover one of them on here, but they're staying focused, right? They're staying focused. They're staying focused on Bitcoin. They're staying focused on building their capital structure, on strengthening the credit for STRC, the preferred stock. And they're directionally correct. And I think once Bitcoin reprices, as we saw today, that Bitcoin went up, 6-7%, 8%, MSTR went up 14%, right? So that premium is still there, right? And when Bitcoin, I don't know when it's going to happen, when it's actually going to happen, when Bitcoin goes on a violent repricing, it is going to be absolutely magical if you hold Bitcoin and you hold MSTR, and you're going to have the best of both worlds, and it's just going to be an amazing time. Like, we're going to have so much fun on the next Bitcoin bull market, whenever it is, whether it's in 3 months, whether it's a year from now, 2 years from now, I don't know. But I know that for myself, it is important for me to be positioned accordingly for this Bitcoin bull market, because it is going to make, in my opinion, it's going to make generational wealth for a lot of people, and a lot of families. Like, again, nothing in this channel is investment advice. This is all financial entertainment purposes, but I'm telling you what I'm doing. And this is my opinion, and you can go ahead and do your own research and see if this is something that is fruitful for you. With that being said, you guys, I got a baby to go tend to. Okay, I think it's my turn to go ahead and bottle feed and clean and change diapers and do all this stuff. Now it's time to stew, right? So I got 2. two girls to tend to. All right. So thank you guys for tuning in. My favorite 40 people in the whole entire world. If you found value from this video, go ahead and subscribe, like, comment, and let me know what you thought. This is the first time I've done something like this on the channel, and let me know if I should do more of these. If I should talk more, if I should talk less. I always try to be cautious with that, so just let me know what you guys think. Guys, this is the Deep Basement Index. My name is Angel Rios, and this is a channel where we build capital in a fiat world together in the form of Bitcoin. All right? I'll see you guys on the next one.